Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition on Business Today. We're going to be focusing on Asian Paints earnings, and with us is the top management of the company. Mr. Amit Syngle is joining in. He's the MD and the CEO of Asian Paints. Warm welcome to you, sir. Good to have you with us. Well, do tell us first up, how did you assess the quarterly earnings? They've largely missed the estimates on the streets yet again. The stock has reacted negatively too. Do you again see the pressure of weak demand bogging down the overall performance of the company again in this quarter as well, sir?
Overall, quarter three has been muted. I think the overall demand sentiments have been fairly low, especially what we felt was that the urban centers were facing a little bit more pressure as compared to the rural. Rural sector still had good demand shoots in terms of what were coming out overall to that extent. For us, the festive season is big. We had a shortened festival season this time because of a shorter Diwali. So the October impact was very high in terms of the quarter, in terms of what we have seen. As a result, all the seasonal markets basically suffered a little bit in terms of the overall deliveries, in terms of what we have seen. Industrial business has done overall well in terms of both the protective and the powder business. Similarly, the B2B business, which is looking at government spendings, government projects, and other large capex projects and so on and so forth, they have done well to that extent, and that has been definitely kind of pulled us up to that extent. We've delivered a volume growth of about 1.6%, but the value has been negative at about 6%. And so overall, I think we've been able to kind of protect the margins. Sequentially, the PBDIT margins have gone up from the last quarter overall in terms of what we see to that extent, although year on year they have been a little bit down overall. So as we see it, I think it's been a challenging quarter in terms of what we have seen overall. But I would reckon that the entire industry is currently, especially in the decorative sector, at a negative in terms of how we see to that extent. And that is something which possibly is kind of going to be visible overall in terms of the players who are there. Going ahead, obviously, we are looking at possibly the conditions improving, and we hope that definitely the rural demand is something which is going to definitely pick up further.
Okay, got that. Sir, just wanted to get a sense on what's your outlook is as far as the margins are concerned. Are you still hoping for that 18 to 20% band for FY25 that you had looked at? Would you stick with that? What is the impact of raw material prices that you're looking at right now? Are they softening? What's the current stance?
So overall, for the quarter, we saw that the raw material prices were deflationary for quarter three. We have seen almost about a -2% deflation in terms of the raw material prices. However, the crude prices have been a little bit volatile. We have seen also a rupee depreciation in terms of what's happening overall. So there are some increases in some of the raw materials which are happening. But on the whole, what we are seeing is that some other critical raw materials are also kind of decreasing. So we don't really see that there would be inflation in the quarter four to that extent, but we're waiting and watching in terms of what really happens in terms of how it kind of really pans out. But as of now, we think it would be possibly flat and no inflation would kind of take place.
So you've said that you're cautiously optimistic on the recovery in the demand conditions. So where is this cautiousness really coming in from? And by when do we see recovery come in, especially for your key segments, any segment that could lead the recovery?
So overall, it's a difficult question to answer immediately because what we are seeing is that the urban centers are still in stress. We have seen some corrective measures taken by the government in terms of boosting the middle class spends and so on and so forth. But paint is a discretionary spend, and obviously, it's the last category in terms of it gets boosted by overall such kind of measures to that extent. So we see that possibly, the retail sector would kind of remain muted a little bit unless the urban centers really spring back in terms of overall consumption. As I said, rural would definitely come up given the fact that monsoons have been good. We'll see some good agrarian economy kind of really getting boosted overall to that extent. However, the bright spark could be the government spending, the overall projects expenditure in terms of what we could see happening in this thing. But to my mind, I think it will take, at least a couple of quarters before we really start seeing possibly stronger consumptions and stronger growths.
So you briefly mentioned, and I wanted to just take your cue and ask you, with this tax bonanza that the budget has extended, Is there going to be any impact on increased demand in your consumer discretionary space as well, sir?
So overall, as I said, some of these areas, would definitely kind of boost consumption. What has to be seen is that possibly given the nature of the business we are in, it's discretionary and it is always deferred to the last to that extent, and therefore we see that possibly the repainting segment would kind of really not see immediately a boost in terms of looking at it, but I think that remains to be seen because the consumption patterns are also changing very, very strongly as we kind of really experience it to that extent. But I think it remains to be seen whether it would have an impact directly on our sector or not.
Right. So for you, even in this quarter, I think the industrials did better than the other segments. Do you expect that to be a trend even in Q4?
Definitely, I think, as I said, the factory segment, the government sector are something which is a focus
Hmm.
segment there, and we see increased spending and increased investments happening in those sectors. I think that will be definitely on a higher side, which will give a boost to protective powder coating systems and so on and so forth. However, I think on the other front, auto cycles are slowing down to that extent, and
Okay.
therefore it could have a
Mhm.
little bit of a slower impact on from a point of view of auto growths in terms of what we will see in terms of the paint sector.
Right. So as far as the volume growth is concerned, what is your expectation on that front?
As I said, if you look at from the trends which are coming out, the urban centers seem to be still stressed. I don't see
Hmm.
immediate kind of really fight back from the consumption there, which is going to happen. Rural demand would be definitely much better. And as I
Hmm.
said, the industrial demand could be also, I think, a case in point in terms of looking at quarter four. Overall, I think demand should be definitely better than what we have seen in quarter three to that extent. And therefore, what we are angling at is a single digit volume growth for the quarter as we see it now.
Single digits. Right, sir. So, looking at the overall increasing competition in the industry, despite the current challenges of demand that you're looking at, would you continue to have focus on innovation and expansion? Would you continue to invest in your newer capacities at this point in time? What's the outlook on that, sir?
So overall, when we look at possibly the competitive scenario, it has been intense. It has been also aggressive to that extent. What we
Yes.
have been, really concentrating is on our strengths in terms of looking at, how do we kind of continue to invest in the brand? How do we kind of continue to service our distribution system? We have still looked at possibly expanding the distribution system even at this juncture, and that is something which is an effort which will go on. Innovation is always required, especially I think at this point of time when the demand sentiments are muted. I think innovation is even more required at this point of time, and we are launching three or four bigger products in the premium and the luxury sector in terms of going forward. That has been going to be the story. And I think lastly, I think we would like to kind of spend overall in terms of our marketing, in terms of really leveraging the brand further and really keep the brand strengths going forward. So I think those would be very clear strategies in terms of what we would like to take ahead.
All right. Well, thank you so much, Mrs. Single, for being with us on this edition, explaining to us the key insights from the earnings. I wish you all the best for the upcoming quarters. See you soon back on Business Today, sir.
Thank you. Thank you so much.
All right, viewers, we wrap up this very special exclusive conversation with Asian Paints top management detailing for us what are the key pressure points that are still pinning down the earnings quality and the performance at this point in time. Still a couple of quarters before we can actually see some improvement. Rural will actually be better at this point in time. Retail could be under pressure, but the industrial segments could be is where the performance could continue to improve, is what the company is also of the view. But single digits on a high single digit basis as far as volume growth is concerned, and 18 to 20% of the margin band at this point in time as well. Looking at the competitive intensity, the company is still prepared to rely on their strengths. All of these key highlights and more. And such conversations will continue to take shape and help you understand how the company is really looking at the earnings performance in Q3. So stay tuned on Business Today.
If you like the video, do like, comment, share and subscribe.